Hello, everybody. We are live with Derek Delaney from the PharmD Financial Planning, and we're going to talk about the state of the economy in this topic today. But first, let's go to a reel. All right, Derek. I'm just going to throw it over to you right away because this is your wheelhouse, and I haven't been keeping track of the news because we have a lot of other stuff going on. So let's just dive right into it, bud.
Sure. Well, thank you for having me on again today. I appreciate it. Not a lot of people are keeping track on what's going on in the news, probably as closely as they want. But it seems like people who do turn in are hearing some of the same stuff. And a lot of that information can be quite concerning considering all that has gone on in the last couple of weeks. So during this PharmD Finance episode, I want to talk about just 3 things that I think are important going on in our economy right now that could influence what the future economic outlook might look like here coming up later this year.
Let's do it, Derek.
So the first one, and it's the big one, it is what's going on with banks in America and what is the Federal Reserve going to do to help or to ease a lot of the concern going on in that industry. And it's really, really fascinating to watch. And it's going to be interesting to see what the Federal Reserve does later on this week as far as are they going to raise interest rates or not. And that is because they're in a situation that regardless of what they do, they're going to cause trouble. So the 2 key words that you're probably going to hear if you turn on the news are, or I should say key phrases, are price stability and financial stability. Price stability is inflation. Financial stability is the financial health and well-being of our banking system. So if the Federal Reserve goes, hey, we want to continue to raise rates, which is going to help us fight inflation, that's going to be a big hammer they're going to drop on the financial health of our banking system. And our banking system is absolutely critical. Without confidence in a banking system, capitalism doesn't work. It'd be absolute chaos. But if you want to protect that financial, if you want to protect the financial institutions and you want to create financial stability in the economy, you would not want to raise rates. You'd actually even think about cutting rates. But if you do that, you're giving inflation a free pass. And one of the Federal Reserve's mandates as an entity is to control inflation and long-term interest rates. So it's going to be fascinating to see what they decide to do, because if you go after one, you're hurting the other. And if you go after the other, you're hurting the original. And both of these are extremely important metrics to everyday people like you and I and most people watching this live right now.
That's heavy.
Yeah. And it's only going to get heavier because you get a lot of financial experts who get on media channels or get quotes in the paper or any sort of media coverage, and financial jargon just starts coming out of left field. So anybody watching this, just know right now the 2 important factors are inflation, which is price stability. That's one side of the coin. And the other side of the coin is the health and well-being of our banking system, specifically larger banks, because it is so critical to our overall economy. Helping one does not help the other, and vice versa. So it's going to be very, very interesting to see what the Federal Reserve tries to do later this week when they come out with their decision whether to continue to raise interest rates or not.
Is there a lesser of 2 evils in this problem?
I don't think so. No.
Okay.
Because I say the lesser of 2 evils is not hiking rates at all. Because I think if we give it long enough, the Fed has done enough to ease inflation later on this year. It's just a lagging variable that won't show in our economic data until later. So I think increasing interest rates now is not going to produce the good that I think is already coming down the pipeline anyway, and it's only going to produce worse results for our banking system. But that's why I'm glad I'm not in their position, because you just don't know, because you don't understand how your current actions are going to affect economic activity 3, 4, 5 months from now.
Fascinating. So what does a person like us do with this information, and to not be too scared, not to go down that path of pulling all your money out and put it underneath your mattress type of thing?
That's a great question. The first thing I would always recommend is, if you do feel a little bit scared and you're a little bit worried about your money and FDIC insurance and what's going to happen to the banking system and long-term inflation, I would talk to a trusted banker. call up your bank, talk to your personal banker, talk to your business lender. They are going to be able to provide you with comfort and ease by explaining things in easy to understand terms, because they're in it every day. And they're seeing how current things that are happening in our economy from a large scale standpoint is going to affect the specific banks that you and I deal with and the people watching this deal with every single day. My guess is bankers are probably going to come out and they're going to go, it's a lot worse for the bigger people than it is for the medium or smaller size banks. I can't be certain of that, but that's what I would recommend, is talk to them because they're the experts in that field.
Okay. That's good advice. Yeah, I mean, this one, you're stumping me on this one. I feel like I don't have any great questions for you because it's kind of like it's so unknown right now. And could there be an option where they just leave it and let it ride? Or
we will find out shortly. The interesting thing is, no matter what they do, people are going to hate the decision, and there's going to be adverse impact. So it's buckle up. It's going to be an interesting news cycle over the next 2, 3, 4 weeks, specifically talking about the economy and investment markets. And that leads me to my second point. So bank failures are a huge thing that are the top of people's minds right now. The other interesting sector of the economy that I think is going to get hit next, or there's going to be a lot of attention paid to it next, is commercial real estate. So liquidity, having money available, is something that banks are struggling with right now to meet withdrawal demands. Liquidity is also going to be an issue for these huge commercial developers because their notes, the loans they took out to do this, are going to be coming due in the next couple of years. And I think a lot of them are going to come out and start asking for help from the Federal Reserve or our government, or just peer forbearance, because they're going to be running into specific issues that I think are going to be similar to what the banking industry is experiencing right now.
what does that mean for someone who wants to buy a home?
That leads me into point number 3, and this is somewhat good news depending on who you are. Point number 3, and an interesting point in the economy that I'm keeping an eye on, are rents. So rents, as a lot of people already know, have been sky high going back to last year, right? Well, they are starting to come down, and they're starting to come down at a dramatic rate. And the interesting thing with that is that home prices are usually stabilized by rents. So home prices won't move a whole lot if rental prices or rents don't move. But now that rents are falling off a cliff, so to speak, home prices, I think, are going to follow. So we're going to see a deterioration, in my opinion, of home prices that are going to follow the trajectory of rents right now. And that is good news for people who are looking at getting into the home market. It's bad news for people who are looking to sell their home for top dollar. Again, I could be wrong. That's just the way I see it happening over the next handful of months. So it's going to be fascinating to watch, because there are a lot of people that are just like you, Sean, who are looking maybe to get into the housing market. And there are far more people who may be looking to get out and selling at top dollar.
Interesting. Now, do you know, I know your finance, but on the rent, because that's one thing that's kind of I've always been curious about, because does it matter where you live? Like as far as how the rents are affected, because like if you're living in a more affluent neighborhood, like will you see less rent drop versus other places, or do you have any data there?
That's a really good question. I think bigger metropolitan areas are going to see rental prices drop a little bit faster than smaller communities.
Okay.
I would also assume that higher cost of living areas are going to have more stable rental prices, because there's going to be more longer term demand for those areas and people want to live in than the flip side of that. Okay. Again, I can't be certain because I'm no expert in rental real estate and that sort of thing, but that would just be my prediction moving forward of which areas you'll see the biggest decline in rent prices in America.
Okay. No, that was, sorry to go down that path, but it's like you know a lot about finances, so I figured, we'll ask. Well, awesome, Derek. That's very fascinating, and almost like it's I'm looking for the word right now, and it's on the tip of my tongue, but I can't say it. But it's like where it's almost scary. It's like ominous. It feels very ominous right now.
It does, Sean. But then you go look at investment markets, which are supposed to be forward looking, and they had a great day today, considering everything that has gone on.
Okay.
So the decision about what the Federal Reserve is going to do later this week is going to be a huge inflection point from future investment markets and where our economy goes and which sectors are going to suffer the most because of it. So keep an eye on that later this week.
It sounds like a topic for next Monday.
We definitely can dive in more if you'd like.
Yeah, we'll see what happens on the weekend and see if there's anything to report on Monday. Otherwise, we might come at you with some other topic that Derek comes up with. So awesome. Any final thoughts from you, Derek?
No, I think I covered everything that I wanted to today. Thank you for having me on again. I appreciate it, John.
It's always a pleasure, Derek. Thank you so much for helping out.